In money matters, the rand was little changed in early trade on Wednesday, even after the release of the latest S&P Global survey and minutes from the U.S. Federal Reserve's June meeting. The local currency was at around 18 rand 76 to the dollar. Grant Nader is the Benguela Global Fund Managers Senior Portfolio Manager, and he joins us now to take a look at the latest market moves. Grant, thank you very much for your time this afternoon. Let's start with taking a look at the rand's performance so far today. Is trade still muted?
The trade is better than yesterday, which was very low volume on the back of the US public holiday. So it's improving today, but I would say it's still a bit muted. We are waiting FOMC minutes this afternoon and a whole series of economic data globally, which I think is keeping trade on the quiet side.
The S&P Global South Africa PMI came in at 48.7 index points in June 2023, pointing to the fourth consecutive month of contraction. Help us make sense of the data and what it tells us about the state of that sector.
Look, you're quite right. It is the fourth month in a row. And remember, anything below 50 is contractionary and above 50 is expansionary. So it is a negative data point. Slightly better than the previous month, though, which is one positive to take out of it. I think anyone who has been watching the data and has been watching the SA economy wouldn't be surprised to see another negative print. It's quite clear we're going through a tough environment. If you take the load shedding into context, if you take the global slowdown, and if you look into the sector, what stood out was into some of the numbers. They actually saw an uptick in the South African-focused business sectors. So retail, wholesale, industry, and construction, surprisingly, were positive. But the global order demand was negative. So the global slowdown and the commodity slowdown and other things happening globally is definitely feeding through into SA. And unfortunately, we are mostly dependent on what happens on the rest of the world. So the rest of the world's PMIs have also been negative. We've seen the US in May was at 46, so even below ours. We saw the Eurozone PMI come out early this morning, also below 50 for the first time in a few months. So it's a global phenomenon. It's not unique to SA. But what stood out, another thing that did stand out, is the outlook over the next sort of few months is more positive from the respondents in the survey. So there's a little bit of heart to take out of it. They also said they're seeing some reduction in input price pressures. So I would say on balance, not an unexpected data point, but there are a few hints of some green shoots in there if you want to be an optimist looking through the data.
Okay, Ultron has concluded the sale of its ATM hardware and support business to NCR. Talk us through the specs of the deal.
So this deal was done in October last year, and it's just been finally concluded. And Ultron is on a transition toward a capital-light business, focusing on cloud services and data analytics and IoT. And so this was just another step in that transition. They sold their hardware servicing and maintenance business to a company that specializes in that, a global company, for around $10 million. And the deal is finally concluded on all the conditions fulfilled. And they're moving toward a business that looks a lot like Bytes, which they have previously spun off, which is a service-focused, capital light, and has been a very good success in the UK. So I like the move.
Okay. According to SA Property Owners Association's office vacancy report for the second quarter of 2023, Johannesburg recorded a higher percentage of office vacancies than the national average during the second quarter. What's driving the declines?
You know, it's a really interesting one. I think there are a few reasons. There's still a lot of space that's been put in place over the last 10 years in Johannesburg. And Johannesburg is home to some of the bigger employers in the likes of the banks and some of the insurers. And I think that they are still mostly hybrid workspaces. So companies are not yet fully taking up all their space. Some of them are downsizing, requiring less space, and they're actually subletting some of their own office premises, which means there's more supply coming onto market. And you've seen a lot of people leave in Gauteng and move to the Cape, and sometimes Natal. A lot of businesses are relocating. And I think that's also behind it. So I think there's a number of factors driving it. 18.7%, unoccupied is a big number. The 2019 base was 12.5%. So some challenges there for Joburg, I would say.
Thank you so much, Grant Nader, Benguela Global Fund Managers Senior Portfolio Manager.